Hello, everyone. Hopefully, everyone is having a lovely Friday, or at least having a better Friday than the market is today. It's been a very interesting time, or rather interesting 2 days to end off the trading week. But for more information about our thoughts on that, stay tuned for our weekly newsletter. There we go. That will be coming out next Tuesday. Monday is a holiday, so we will not be having the newsletter go out then. You can expect for that newsletter to hit your inboxes Tuesday morning. In the meantime, I hope everyone is ready for the extended weekend. Here in LA, we are ready to do absolutely nothing because it is going to be 110 degrees both Saturday and Sunday. So hopefully everyone that is in the LA area is hydrated, has got their freezer nicely packed with ice, and is ready for the heat wave. In the meantime, hello Juan, Erandi, Berta, Francia, Kike, my mother, Kiros, Ermelinda. Hopefully everyone is doing well. We'll wait 1 or 2 minutes for everyone to join us, but I just wanted to pop on the camera and say hello. Hello, Magnolia. What happened with the beard? Yeah, it's gone. I'm going to start growing it again, maybe. But hi, Vero. Hi, Dinora. It's funny. Whenever I shave my beard, people always say I look younger. What do you think? Do I look younger without a beard, Kira?
Yes.
Hi, Elizabeth. Hi, Maida. Hi, Maria. Hi, Nancy. I think Julie is doing good, but she is here so she can answer for herself. Can everyone hear all right? I think I've fixed the issue with the microphone, so no longer will you hear an echo. So just before we get started, I want to make sure the volume's all good. There's no echo. Hi, Claudia. Perfect. Glad to hear it. Cool. Well, if everyone can hear me, let's get started. So it's been 2 months. 2 months since Sectors Made Simple has been available. We have had many people subscribe, and we have had the pleasure of bringing in many of the Girasoles to join us as we start to really show not just what the Matrix is, but what information the Matrix uses, and then how you can use that information smarter and simpler to make smart investment decisions. But we've talked a lot. I've talked a lot. We've had 8 free webinars. I believe this is the ninth free webinar, eighth free webinar. Counting is difficult, but we've had many free webinars and many members webinars. And I wanted to take today to just pause for a moment and kind of go over all of the information that we've covered, because the first group of webinars was all about the information you need to know in order to know the matrix. You need to know what an ETF is. You need to know what relative strength is. And all of this information, when put together, is what you can use to know what the matrix is telling you, and then how you take that information and turn it into some cash. So, what I wanted to do with you all today is let's hit the rewind button. Go back to cover all of the information we've talked about. But instead of me sitting here trying to give you 8 weeks worth of content in one short video, I'm going to ask you guys the questions. Today, it's my turn to ask the questions and your turn to answer them. So, my mom and I worked together to put together a list of questions. These questions shouldn't be too difficult, but they're going to test your knowledge about not just sectors, but about investing with sectors, about using the matrix. And hopefully, It helps you to know what information you know, but what information you may not remember or what may not be clear. Because the first part of today's session is going to be all about this quiz. I'm going to ask you many questions, and you all will tell me many answers, hopefully correct answers. But if you get a question wrong, don't just sit there and put a little -1 next to the question. No, ask me questions. This is all about me figuring out what information you guys remember, and then what information you would like to hear again. So after we finish up the quiz, there's going to be no grading. There is no passing or failing. Any questions you got wrong or anything you don't remember or any topics you want to ask about, the second half of this session will be your opportunity to ask those questions to me so that we can make sure that everybody is on the same page, everyone knows all the right answers, and then we can move forward together. How does that sound for everyone? Everyone on board? If so, we can get started. Wow, I didn't realize how much of a delay there is between YouTube and the streaming. I'll see if I can fix that. Next. There's always something for next week. So, anyway, let us get started. So, question number 1. Every single public company belongs to one sector or another sector. True or false? Every single public company belongs to one sector or another. What do you all think? True is correct. So while we look at the SPDR ETFs, which is the State Street SPDR ETFs, all of our XL somethings, each company belongs to one sector. So you would say that this company is in the discretionary sector, or this company is in the technology sector. Oh boy, technology had a week. But the answer is true, as everyone is getting. So every company will have its sector. And the sectors that we look at are for the S&P 500. However, the entire market also can apply to these sectors. While our ETFs that we look at may not have all of these companies in them, the same sectors that we look at for the S&P 500, we can also apply to the entire market. So we can say what companies in different exchanges are part of the discretionary sector, which ones are in the staples sector, so on and so forth. Okay, question number 2. A company's stock price tends to move in groups. That's why it's important to find a leading sector to help find the possible needle in the haystack. So a company's price tends to move with its group. What do you all think? True or false? That is correct. The answer is true. In a research study conducted, it was found that 80% of a stock's movement is due to its sector, which means that 4/5 fractions or percentages, so 4/5 or 80% of the price change is not due to that company. It's due to how the sector is performing. A rising tide floats all boats, so you would expect that if a sector is performing well, the majority of the companies in that sector will also be seeing some of that profit. Okay, question number 3. If you invest in a hot sector, you are guaranteed you're going to make money in that sector. So if you invest in a top sector, you are guaranteed that you will make money in that sector. True or false? That is correct. While looking at the sector will show how the majority of companies in that sector are doing, we can never know what will happen for sure. We could say that last week was a good week in the market. However, this week, market volatility took off, and with it, all of the sectors went back into chaos. Bunch of sectors went up, bunch of sectors went down. So we can never know what is going to happen tomorrow, or I guess Tuesday when the market opens. We can only do our best to try and figure out from what's happened before what could happen. But we're not fortune tellers. We don't have a magic ball that turns our hard-earned time into cash. But we can do our best to increase our chances, but there's no get-rich-quick strategy here. There is no one way that will always make you money. Investing has risk, but risk has reward. So the answer to that question is false. Question number 4. Sometimes you may have more than one sector that shows signs of strength. True or false? Sometimes there is one sector, sometimes there is more than one sector that are all doing very well or are all very strong. True is the correct answer. So we've talked a little bit about in our members webinars about the economic cycle, where the economic cycle is a progression over time of how our economy is doing. Is the economy growing? Is it maybe at its biggest? Is it on its way down, or is it near its bottom? And with that, we have certain sectors that we would expect to perform well. But we can't rely on that alone. But what we can tell is that oftentimes multiple sectors, usually all having a similar trait, will do well. So for example, sectors that are typically more defensive will do well in certain markets or when certain things happen. If you want to learn more about that, show up to our members webinar on Tuesday, where I'll be talking more about offensive versus defensive sectors and what those mean and how we can use markets such as the current one we're in to be able to know which sectors may be the hottest sector. But going back to the question, there is often more than one sector that is performing well. So the answer is true. Question number 5, and this will be a multiple choice question. One of these will be the correct answer, and I will repeat them so that we're all on the same page. Relative strength is option A, how strong the market is now compared to last year. Option B, how two securities compare against each other in price performance during a specific period of time. Or C, how fast the price of a stock has gone up or down. So again, relative strength is A, how strong the market is compared to how it was last year. B, how two securities compare to one another in price. And C, how fast the price has moved up or down. B is the correct answer. Relative strength charts will always show how the price of the first stock that we look at is compared to the second. To quickly show this, I want to go over to my screen. So if we go to point and figure chart and we want to compare the price of discretionary to the price of real estate, we would type in XLY because we want to look at how discretionary is doing, ... colon, and then compare it to what we want to compare it against, which in this case would be XLRE, real estate. And the chart that we get, remember, this is not a price. There is not something that you can go buy or sell that is $405.95. This is how the price of discretionary compares to the price of real estate. If this number goes up, that means that discretionary is improving compared to real estate. If it goes down, which is what it did today, discretionary is getting weaker compared to real estate. Awesome. Back to my lovely face. And to question number 6. A defensive sector includes companies that specialize in aviation, arms, and aerospace. So a defensive sector refers to our defense, our government's defense. So the military, things like that. True or false? False is the correct answer. Again, I will cover this in a lot more detail in our session next Tuesday for the members, but the answer to this question is false. A defensive sector refers to the type of market that sector does well in. If there is a lot of things going on in the market, a lot of turmoil, a lot of ups and downs, a defensive sector will usually be the ones to perform best in that crazy market. Whereas other sectors that are more offensive, you'll start to see them bouncing up and down a lot more. Their volatility will go up a lot more. Is defensive similar to staples? Yes, staples is a very defensive sector. But again, for more information on that, come to next Tuesday's webinar. And while I'm on the topic, I want to share something all with you. The Girasoles, this has been an amazing month having all of you with us, and I hope that you have enjoyed having access not only to our webinars, but also to the Matrix, and I hope that you've learned how you can use the Matrix to make your investment decisions that much easier. Many of those month subscriptions will begin to end starting next week. However, I promise you that regardless of if your subscription ends on Monday or Tuesday, whatever, all of you will still be able to join us for next Tuesday's webinar. So even if your subscription happens to end on Monday, you will still be able to join us for Tuesday's webinar. And on Tuesday's webinar, I want to share with you all my gift to you as a thanks for being part of our community for the past month, and how we would love to keep you around so that you all can continue learning with us how to use the Matrix and invest in the market simpler. So again, all the Girasoles, regardless of if your subscription ends on Monday, Tuesday, whenever, all of you will still be welcome to Tuesday's webinar, and I hope to see you all there for some amazing news on how you all can still stay involved with Sectors Made Simple moving forward. Awesome. Question number 7. The consumer discretionary sector refers to A, companies that do not publish their financials, B, companies that tend to thrive during hard times in the economy, or C, companies that are cyclical in nature. So again, discretionary is companies that do not publish their financials. B, companies that tend to thrive during hard times or hard markets. And C, companies that are cyclical in nature. C is the correct answer. So again, we talked just about how companies that tend to thrive during hard times, those are our defensive sectors. That is going to be the sectors such as staples. Discretionary is more about those things that you might splurge for. You might go out and buy a new pair of shoes, or you might go buy a new pair of headphones or a new car. These are discretionary. These are things that you don't need, but you may want. And they tend to be purchases that are a little bit more, they're not always happening. They'll happen over time, or they're cyclical. So the answer to that question is C. And as a reminder, if you go to finviz.com, you will not find the consumer discretionary sector, where if I went to groups and we looked at our groups here, there's no consumer discretionary sector. Finviz calls it the consumer cyclical sector, so it's important to keep that in mind. Which sector would sell bikes? That would also be under discretionary. That would still be under the discretionary sector. So remember, Finviz will show our discretionary sector as the consumer cyclical. These are your more I don't need it, but I would like to have it kind of things. It's not your toilet paper, your toothbrushes, your groceries. It's your cars, your things like that. Awesome. All right. Question number 8. If your company or sector is at a level of or is at a BPI of 80 or more, it means that it is overbought and you should keep a close eye on its price movement. So again, if you find a BPI of 80, that means that the sector is overbought and you should keep a close eye on what it does. True is correct. So again, we consider anything to be in a BPI, which is the bullish percent. It's the percent of companies in that market that are on a buy signal. Anything above 70% is considered to be overbought. And that's our kind of red zone. That's where we're getting worried, because if it starts to go down, it may continue to go down. It's not guaranteed. We never can have promises with the market, but it has a possibility of going down. On the other side, the green zone, where we might want to start getting a little bit more, we might want to be looking to see if there's an opportunity to buy in, is when our BPI is below 30%, which is the oversold range. When we see that our column reverses from O's to X's in that below 30 range, that's a good sign. That's what we like to see. Looking at the current BPIs, we don't have anything below 30, but we have a lot of stuff that's over 70. So keep an eye on that. It's very interesting to keep an eye on BPI and see how it changes over time. So keep an eye and let me know if you ever find anything very interesting. I would love to take a look at it and talk with you more about it. Okay, question number 9. The bullish percent index measures the risk level of that market. So again, the bullish percent index measures the risk level of that market or of that sector. True is the correct answer. So again, bullish percent is the number of companies, the percent of companies in that market that are on a buy signal. So we use this number to say what the risk of that market is. Anything above 50% is considered to be a bull market. So horns go up, the market's going up. Anything below 50% we consider to be a bear market. Bear claw goes down. So bear swipes down, the market is going down. So again, this is our level of risk. The bigger they are, the harder they fall. The higher the BPI, the more risk there is. Question number 10. When a sector is showing a positive trend on the matrix, it is telling you that it is the leader right now. So when a sector is showing a positive trend, or it's showing an increase in momentum, it means that it is the leader right now. This is one of the harder questions, I'll tell you that. The answer is false. Remember, our X count is our indicator for short-term performance, because when you're looking at one of these relative strength charts, the column that we are currently in is our X or our O. So all it needs to do is be going in one direction or the other, and it's always doing that. But our positive or negative trend requires a double top breakout or a double bottom breakdown. So it takes a lot more for this number to change. So who is the leader right now is probably best indicated by the X count. If you want to know who has been the leader or who is the long-term leader, that is what you'll use the positive trend for. And again, if any of this is ever unclear, or if any of these questions you get wrong and want to know why, save the questions for the end, because I will have an opportunity to go over your questions together so that we make sure the next time I give this quiz, I may give this quiz again in the future, everyone gets in 100%. Okay, moving along and back to my lovely face. All right. It is important, true or false, it is important to compare today's matrix to the one in the past to find the trend of sectors over time. So it is important to compare the current matrix to one from a day ago, a week ago, or sometime in the past to see how these trends have changed or sector leadership has changed over time. True is correct. We use momentum because it's not, you don't want to just know who is the leader right now or who is the leader today. There is something important about knowing who is gaining ground. What sector may not be the leader right now, but is gaining ground? Who is catching up? Who is starting to fall behind? So it's very important to keep in mind where we are coming from to know where we are now. Okay. Again, multiple choice question, A, B, and C. Choose the one that is correct. A dark green color in the cell of a matrix means A, that the sector is not ripe for picking and you should wait. B, that the sector gets the strongest rating in both positive trend and X count. Or C, the sector has many socially responsible companies in it. It is a very green or very kind of environmentally friendly company. B is correct. The dark green color in the matrix means that the positive trend and the X count are telling you the same thing. Dark green means that it's in a positive trend and a column of X's. A dark red means that it's in a negative trend and a column of O's. There we go. That's better. So the answer is B, that it's the sector that gets the strongest rating in both positive trend and X count. Question 13. We're getting along very well here, and everyone is doing so well. Again, multiple choice question. If you follow all of the rules in investing, you are guaranteed that A, you will never lose money, B, you will always make more money than you lose, C, there are no guarantees. So again, if you follow all of the rules of investing, that you will A, never lose money, B, you will always make some profit, or C, there is no guarantee. Again, this is a tough question. The answer is, and I hate saying it because I would love to give you great news, it's C. You never know. We can never know what the market is going to do tomorrow. The best thing we can do is to study the market and do our best. But again, if investing, you would always make more money than you would lose, everyone would be an investor. No one would go out and work. It's so easy to just sit here, make trades, and if you know you're always going to make your profit, then it's easy. But the reason we are here together, the reason that we study all of this information is because there are no promises of profit. No person out there can guarantee that you will always make money. If they are telling you that, run. Everyone can only give their opinion of what they think is going to happen. I can only give you my opinion. I can only show you the information that I have. And then we can work together to increase the chances that we make money. But there's no promise of making profits. Past results cannot guarantee future performance. But what I can tell you is we are all in this market together, and we will all learn together how we can make the most of what we have. Moving along. Sector rotation means, this is a true or false. Sector rotation means that you begin to invest in the strongest sector and then rotate them every 2 weeks to the next sector in line. So for example, this week you would say discretionary, then the next sector would be staples, then technology, then industrials or real estate, blah, 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 blah. True or false? Ooh. The jury is still out on this one. So the answer is false. The reason is sector rotation. We don't trade or change every 2 weeks, and we don't know what we're going to change to. The reason it is called sector rotation is that the leaders will rotate, and we will do our best to jump from one to another when is needed. But we don't just jump ship because 2 weeks later or 2 weeks later it tells us to go into this sector. No, we follow the sectors where it may be that today discretionary is doing the best. Tomorrow it may be building materials. So if we wanted to, we can switch over to building materials. We can rotate in and out of sectors as much as we want, but also you don't have to put all your eggs in one basket. You can invest, say, discretionary technology, and again, not financial advice, just an example. Say discretionary technology and building materials are doing very well right now. You can put a little bit of money in all three. You don't need to just buy one. And just because you sell one doesn't mean you need to sell the whole house, the dog, and the cat as well. You can hold on to as much or as little as you want. And you choose when you want to move your money, and you choose where you want to move it to. Okay, next question. The economic cycle affects the rotation of sectors. Or, said in another way, the economic cycle affects who the sector leaders are. True is correct. As I talked about a little bit earlier, the economic cycle is something that'll happen over a longer period of time, but we usually can find where we are in that cycle by looking at the market and looking at what sectors are doing very well. When the market volatility is low, which means the market is a little bit more predictable, we would expect to see certain sectors do well in certain markets, such as, this is going to be difficult to say because the end of this week has just blown everything up in the air, but in the calmer market that we had last week, we saw that discretionary, communications, and technology all were doing very well, which tend to be sectors that perform very well in an expansion market. Right now, again, volatility has gone through the roof. It's doubled over the past 2 days. So our ability to rely on this cycle has kind of gone down a little bit, but that doesn't mean it's gone. So the economic cycle is as old as time itself, or as old as, I guess, people were trying to buy and sell things. So that's not something we're going to see go away just because volatility decided that it was back from vacation and it wanted to jump back into the party. So the answer is true. Again, multiple choice question here. When two sectors show strength, it is helpful to look at A, the last day's price change, B, their relative strength to each other, or C, you have double the chances of making money. So when two sectors show strength, it is helpful to look at the last day's price change, B, their relative strength against each other, or C, you can make double the amount of money. B is the correct answer. Good job, everybody. So again, as we saw with our relative strength charts, comparing one sector to another, when these two sectors show strength, it's nice to know which one is performing better. So we can do this by comparing that relative strength chart. So if you were to say discretionary and communications are our two sector leaders, well, do a relative strength chart. Look at who is the leader right now, so you can figure out which one is stronger than the other. And the best way to do that is our relative strength charts. Okie dokie. Next question. In a point and figure chart, a column of X's means A, the price is going down, B, the price is rising, or C, that a buy signal is sure to happen soon. So again, A column of X's means the price is going down, B, it means that the price is rising, and C, that a buy signal is sure to happen soon. If you answered B, you would be correct. When my keyboard decides to turn back on, there we go. So again, if we want to look at a company and look at its chart in point and figure, let's go back to our favorite crazy game of tic-tac-toe, shall we? Tesla! What has Tesla done today or this week? Well, it's in a column of O's. Remember, a column of X's goes up, a column of O's goes down. So a column of X's, as per the question, means that the price is rising. So again, if you were to see a column of X's, a new X on top means that the price is going up. Awesome. Question number 18. The number 9, which you can see right here, up by the 496, is in point and figure charts. That means September. A is September, B is April, C is May. So the number 9 is September, April, or May. September is the correct answer. So again, the number 9 refers to the month. Our 1, 2, 3, 4, 5, 6, 7, 8, 9, January, February, March, April, May, June, so on and so forth. 9 means September. So what happens when we go to October? We don't go to 0, we don't go to 10, we go to A. So October would be A, November would be B, December would be C. But for the purpose of this question, if you answered A, which is September, you would be correct. Awesome. Next question. You may have all of the numbers from 1 to 9 in one column of a point and figure chart. So, to say this in a different way, you can have multiple numbers in the exact same column. True or false? True is the correct answer. So let me see if I can find a chart that would show this a little bit better. Let's go to discretionary. Okay, so if we were to look at this column right here, we see that there is all in one column, B, which is November, C, which is December, January is 1, February is 2. So this right here shows us that we have 1, 2, 3, 4 months, well, 3 full months and a little bit of February, all in one column. Remember that if you see that red number or red letter in a column of X's, that means that it's an X. If you see it in a column of O's, that means it's an O. Emelida is asking a great question. Why did we see Tesla go down after the markets closed? So, hay una cosa que es after hours trading, que hay una opción en muchas compañías que puedes comprarlo y venderlo después del cerrar del mercado, que no es una cosa en el mercado, es una cosa en su broker. Y brokers tienen una lista que puede vender después del cerrado del mercado. To say that in English as well, the question is if you can trade, or why we see Tesla's price going up and down after the market closes. Certain brokers will offer the ability to trade certain stocks after hours. They won't allow for all stocks. However, brokers will offer certain stocks to be able to be traded after the market has closed. So Tesla would be one of these stocks. So you could go and you could look up Tesla after hours, and you would see how Tesla has done after hours. So for example, here we see that the market that Tesla closed at 418. However, the current is at 391.68. So we see that the price can go up and down even after the market has closed. Just because the market closed doesn't mean that investors don't want to still be making their money. So after hours trading will happen, and you can get involved in after hours trading by looking at what offers or what companies your broker will allow you to trade after hours. Again, it is more difficult though, and take this with some additional risk, where you don't have as much information available and there's not as much trading going on after hours. So you may be left coming Monday morning realizing that because you bought after hours, things have changed a little bit. It's usually best to trade when the market is open. Okay, moving right along. Question number 20, multiple choice. The consumer staples sector is considered to be A, a defensive sector, B, a commercial sector, or C, a financial sector. Violeta, so after hours trading, it wouldn't really have an open because the open refers to the price that it started off the morning at. So when they rang the bell, quite literally there is a bell that they ring. When they ring that bell, it's the price that that morning starts at. But the price will change throughout the night, and then you will see those changes occur in the morning opening price. And as many people are guessing, or I guess guessing is the wrong word, telling me, the answer for this is A, that the consumer staple sector is considered to be a defensive sector. Again, for more information on defensive sectors and offensive sectors, how we know which ones they are, and how we can use this information to know how and where the best investment opportunities may be, come join us for next Tuesday's members webinar. All right, number 21. We're almost at the end, everyone. Stay with me here. The value assigned to each point and figure cell can be changed to view a different perspective on the price movement of a security. Or, asked a different way, the size of that box we can change so that we can see closer or further away how the price is changing over time. The answer is true. Let's go back to our discretionary chart, shall we? Let's go look here. If we scroll down, underneath chart attributes, there is chart scaling. We can change the size, so we can set a user-defined, and this will change our box size. User-defined will change the ratio or the amount of change. Remember that box size will change over time. So prices between $20 and $100 will be a $1 difference. Prices between $100 and $200, I believe, would be $2, so on and so forth. Changing this box size would change the scale of that. But we can also look at percentage, where say we want to look at 3% for each box. Keep an eye, remember this chart, keep this chart in mind, memorize it. There will be a quiz later. There won't be a quiz later. If we hit update, suddenly a lot of that noise, a lot of that bouncing up and down goes away. But so does the price of each box, where now each box, instead of just being $2, is now about $4 or about $3.80. And we see that as the price goes up, for example, here, the difference in price is $3.80. For the next box, it's $3.96. For the next box, it's $4.08. And it goes up. The jump gets bigger and bigger and bigger for each box because it's based on the percentage from the previous, or it's 3% more than the box below. So you can set your own box sizes to change the scaling. You can define it by percentages, so on and so forth. Alrighty. Next question. Investing in sector rotation is the equivalent of day trading. So sector rotation is an example of day trading. True or false? False is the correct answer. Sector rotation is a strategy that usually you look at more so days is maybe even short. Weeks to months is the time frame that you're looking at. Again, in a normal market, we don't expect for sectors to be our rising stars that we put a call on and we buy enough money to buy off the house, to buy a new yacht and go on a vacation for. They are our cash cow. It's the place that we put our money because it's not going to make us a fortune, but it may give us a little bit better chances of slow progress over time. It's like the tortoise in the race. It will always be moving forward, hopefully, and it's our good medium to medium long-term investment strategy. Whereas day trading, you're looking to make your money today. You want to find something that's going to trade and have a giant price change in a matter of hours. So sector rotation, maybe not your best choice. 3 more questions, everybody. It is impossible for a company's stock to rise in price if it does not belong to the winning sector. Asked another way, if the company is not in the winning sector, that means that it will not go up. True or false? False is correct. A stock can go up even if its sector goes down, just as a stock can go up even if it's not in the winning sector. Remember that 80% of a stock's movement is due to its sector, but we have our rising stars that may not be in that winning sector. Or you could have a winning sector that a company is going down. It works both ways. So keep an eye on your stocks. If you're looking at stocks, think about the sector. That is important, but don't leave all of your decision to be how is that sector doing. There are very good companies with strong fundamentals that are not in the leading sector, but can perform very well and make you some money. To learn more about that, I recommend looking at fundamental or technical analysis, which is studying a stock for their values. How good is that company? Are they profitable? How profitable? Look at that, because that will tell you a lot more about the single performance of a stock than just if it's in the best sector or not. Along the same lines, question number 24. Be a Profit offers A. technical, or B, fundamental perspective of a stock? B is correct. Remember, technical refers to the price. When you're looking at technical analysis, you're studying the charts, such as we can look at the double top breakouts or our pivot points, which was the topic of Tuesday's class, this past Tuesday's class rather. Be a Profit instead looks at the fundamentals or the values of that company from an economic standpoint. And Be a Profit is a way of saying we want the stock to check these boxes before we say that it's a fundamentally strong stock. And last question, sectors always rotate in the same direction. True or false? And to round it out, everyone gets this answer correct. Sector rotation, or sectors, don't always rotate in the same direction. And looking at the matrix right now is a great example of this. We saw, as the volatility continued to go down, that our sectors returned to the economic cycle. It returned to what we would usually expect to be doing well in a certain period of time. But as volatility has gone back up towards the end of this week, our sector leaders have kind of shattered. Our idea of our perfect market has gone away. We see certain sectors that were performing well, such as technology, losing really hard. Whereas other sectors, such as, I believe, building and industrials, starting to gain some of that ground. So we never can predict. Sector rotation is not the perfect economic cycle, and this is the way it is. The market will always change, and we can never know for sure which way it is going to change. But we can follow how it changes, so we know where we put our money, or we can get a better idea of where to put our money, and how we can know where to look. So when things start to turn, we know those signs. That brings us to the end of the quiz. I hope everyone enjoyed this opportunity to realize how much you've learned. Realize how much all of us have learned. Because the Matrix and Sectors Made Simple is not just about giving you information. It's about teaching you how this information can be used and giving you the confidence that you can take this information and create something meaningful out of it. We don't sit here and sell strategies. We don't sit here and invest your money for you. We teach you how you can take your investments into your own hands and how you can do it with confidence and with a lot of resources. So thank you all for being part of this quiz. Before we end today's session, I want to open this up to all of you. I want to hear if this quiz has brought up any questions, anything that you would love to learn more about. If it's not a question that I can answer right now, it can become a topic for a future class. I want to make sure that these classes are not just what I think you should know, but I want these classes to also be about what you want to know and get answers from. It's a pleasure to hear from all of you how you use this information, what other information you use, because it helps all of us learn together how we use this information. Tom Dorsey still learns every single day of his life. I still learn every single day of my life, and it is so fun to get to join you all for 2 times a week to learn together and to study this together. Okay, so Leonardo is asking about the economic cycle in relation to stocks. Um, I can. I think that'd be a good one to revisit. I think it would be good to do an entire class on that one. So that will become maybe not next Fridays, but one of the free webinars I will do on sector rotation. Or sorry, not on sector rotation, on the economic cycle. You would like to learn more about simple moving average and exponential moving average. That would be a great topic. And I think that that's what next Friday's webinar will be about. BPI, we have a webinar on. If there's any specific questions you have in regards to BPI, let me know and I can answer those for you. Or if you would like a more formal response to answer your questions, or if you have multiple questions, please shoot me an email at support@sectorsmadesimple.com, where I am the one who typically reads those emails. So if you shoot me an email there, that is a direct line to moi. So you will get a response. Leonardo, you have no idea how much it means to hear that. It's a pleasure that I get to share information like this with you. I don't just share this stuff because it's my job. I share this stuff because it's very interesting to me. I love learning more about it myself, and that I'm able to share this information with you all and have it make a difference. The last thing I ever want to do is sit up here and tell you a bunch of information that you can't use. The fact that you all can use this information is so meaningful, and to both personally and professionally. So thank you all for being students, just as I'm a student with you all. I try and teach from what I've learned, but we are all learning together, and it is so much fun to be able to learn with you all and to have all of you as not just subscribers, but as community members. We have created a community here. And again, it's not just our subscribers, it's everyone that attends these webinars. All of the names that I recognize each week that keep showing up. So thank you all. It's been so fun. I very much look forward to next week. Again, Tuesday's webinar will touch a little bit more on the defensive and offensive sectors. I'll see if I can lump in the economic cycle conversation into that. As a reminder, Girasoles, even if your subscription ends on Monday, you will still be able to join us for Tuesday's webinar, where I will have a little bit more information with you all, or for you all, about how you can stay involved with Sectors Made Simple. I hope many of you are able to continue being subscribers to the Matrix now that you know what we're about, what the information we offer is, and how you can use the Matrix. It's been a pleasure and such an amazing journey to be with you all for the past 2 months rather. But thank you all, and on behalf of myself, Kira, Nate, and my mom, and all of you, thank you for being part of this journey, and I look forward to Tuesday and all of our future webinars where we continue to learn how we can make using the Matrix and investing simpler. Thank you all so much for joining us today. I hope all of our members can join us on Tuesday, and we will see you all next week. Take care, everybody.